Hi and welcome to the amazing world of trading. My name is Kagiso Chidi, also known as Voice of the Cryptos, and today I have an exciting segment for you guys. I'm going to be breaking down the price action for crude oil. Yeah, fantastic. Let's get into it. So the reason I'm actually doing this is because crude oil has been very much volatile over the past couple of weeks. It has been one of the most volatile assets on my watch list, and I feel like we should all keep an eye on it, especially if you're trading a lot of commodities, because like we know, crude oil does give an indication of how economies are actually doing. Based on the demand of oil, it shows if the global economy is actually doing well or bad. And since there's always talks of a recession, talks of a depression, a tariff reduce recession, things like that. You always have to keep an eye on oil on your watch list so that you can stay ahead of the curve and try to see these things ahead before they happen. Obviously, if you can prepare for things along the lines of recession or depression, you can move your money to the right places and actually make profit when everybody is more or less, going through a bit of hard pain. Yeah. All right. So let's get into it. So first and foremost, the first place we're going to start looking at the period of COVID. Period of COVID was very important because this one, for the first time in history, when they shut down the whole world and said nobody was allowed to be moving anywhere and anything, we saw the price of crude oil or oil in general go to negative zones. And for the first time in history, people didn't even understand. You saw the barrel of oil going to like negative 10, negative 13, and it didn't really make sense why an asset like oil or something as useful as oil is at negative. And what does that even mean for the economy? So basically what it actually meant is the asset itself was so undervalued that it was, if you were having oil, you're running at losses from things like your inventory, because you're not going to be able to make that money back from sales due to the weak demand. So that's why we saw oil go to negative zones. That's the first extreme we saw. And then after that, we saw the price of oil ramp up and shoot up for the moon, and we saw it get to prices of $130 for a barrel of crude oil. This was very much influenced by the war that's actually happened in Russia. But for me, it also makes sense in the sense that if we're having if let's say we're having, this is even, if we're having a big pull down, it makes sense that we have a big pull up before leveling out like that. If let's say we have a big pull up, it makes sense that we have a big pull down before leveling out like that. So I think it is very much important that we understand. I think it's very much important that we understand, the whole dynamics of the market itself. That it's like more like a closed system. So no matter what we actually do, the market is gonna balance out eventually. So once we've had this pull down, had this one up here, the most important thing is to understand is that we're having a bit of a double top over here with the market price shooting down. So once the market price is shooting down, it's retracing this up movement that took place over here. So now, if the market is retracing, what we need to do is that we need to look at our tools that are very good in terms of measuring retracement. Once we start to measure retracement, is the best time of actually executing. If you are looking at maybe entering a specific trade, entering at a retracement can guarantee you or reduce the amount of risk exposure that you're having. It's not like catching a trend whereby you're finding the market moving. You're finding the market at the extreme, and it's always good to enter the market with the least exposure. It doesn't really guarantee anything, but then it's like you're trying to enter the market with the least risk possible. Fantastic. So we got a pullback over here. We're going to check out our Fibonacci tools and more or less try to see how far back this retracement is actually taking us. And as we can see, it's almost by the 618. I'm going to make a line over here. It's almost by the 618. As you can see, we missed the 618 just by a little bit. And for me, it's okay, because if you can really think about it, due to these extremes that we actually saw, I'm not expecting textbook setups, but these setups that we're going to be highlighting over here can help you maybe spot out early movements or specific areas to actually enter the market in. So yeah, once we over here we're seeing the 618 rejection. What we need to understand is that if this is a proper rejection of the 618 and the market starts shooting up, it means that the pattern or the formation that will be playing would be an AB is equals CD pattern, with this being the A point, this being the B point. Oh, my B. This being the C point, and we need to find our D point. How we're going to find our D point is that we're going to go to the Fibonacci tool itself, the same one that we measured, take it and put the start point over here, and then bring it in, and then over here. So we're looking at if this actually plays out. This is us planning for if this is really the start of the biggest bull run we've ever seen. We're seeing prices get to like 120. That's if we're going to the upside. But if the market is actually going back down and it's actually retracing, our next point would be over here. Our next point would be over here in this zone over here. Yeah, somewhere over here. Let me do it better. Somewhere over here. That's where our next point would be. But looking at how this thing is looking, nothing is guaranteed in the market, but it's looking more probable to go to the upside. The reason why I say this is because when we go deeper into the smaller time frames, you'll get to see that, for example, the market itself right now, it's moving in a channel. When you zoom into this chart over here, we get to see that the market is actually moving in a channel. And the channel itself consists of a rejection over here, a rejection over here, one, a rejection over here, a rejection over there, another test of this upper diagonal line of the trend line. This is the fourth test of this upper diagonal of the trend line, and then this test over here. This test is the one that confirms this whole channel, and we are seeing that the market did a false break, came back in, now it's consolidating over here. From this formation over here, as you can see very evidently, it did a head and shoulder pattern, one that does not look the most prettiest. But one thing I've realized is that these head and shoulder patterns, as maybe as deformed as they might look, they play out fantastically. So that's why I'm considering what happens over here. If we see a break of this structure and the price goes down over here, then this head and shoulder pattern becomes invalid, and what we're seeing here is not actually true. And we'll be looking at what price does if it comes down over here to this bottom trend line. If the price comes down to this bottom trend line, what would it actually do? But besides that, if we can take a look even at the smaller time frame or zoom in even more, let's go to like the 4 hour or the 1 hour, we'd see that after the price had broken this zone over here, after the price had broken the diagonal zone, after the price came out the channel, this is the channel line over here, it came back down, it formed a triangle, 1 rejection, 2 rejection, 3 rejection, another test there, another test, another test, another test, and then a break up. And right now we're seeing that we're on the top of this channel over here. So we're going to see how the market actually reacts, if we're going to get a rejection and go back up to the upside, or we're going to get a rejection with the hard pullback into the zone and potentially maybe go back down here. Guys, I hope this gives clarity. I hope this gives clarity to whoever's actually trading oil at this point in time. Zones like your $67 are to be highlighted. Zones that we talked about over here should be highlighted also. And yeah, don't forget to subscribe so that you're always up to date with the content that I'm posting like this. Get notified, click onto the notification bell so you never miss a beat. And yeah, thanks for actually watching. Cheers.